Going on, everyone? D. Anthony here with Evolution Traders. We're going to start doing a lot more content. So there's been a lot of struggling traders out there, a lot of people kind of trying to get their feet under them. Maybe you were having a little bit of success, within the last few months, and then suddenly that's sort of dried up. Well, truth be told, markets are extremely hard to trade right now. And the reason why they're hard to trade right now is because the ranges are so big. I mean, we're getting 400, 500, 600 point moves in a day. We woke up Monday morning from Sunday overnight. Futures were down 1,000 points. Literally almost a 35-40% retracement on Monday. And then today we pretty much another dead cat bounce, almost eating up a lot of that 1,000-point sell-off from the weekend. Now, futures market just opened up right now, just a little bit ago, a couple of hours ago, or an hour ago, I should say. It's 4 o'clock here in the afternoon in California. What we're looking at here, Nasdaq futures down 100 points. So a little bit of a yo-yo effect going on here in the futures market, where we open up big, we open up big down. We open up big, we open up big down. It's kind of hard to get your feet situated, okay? Because the levels haven't been tested in a very long time. So if we're looking at this 1 hour time frame, I want you guys to kind of notice the high that we put in today. So we came in off the bounce. Here's the, the opening candle of the day. We had an immediate flush kind of through these pre-market lows, and then we bounced 1, 2, 3, 4 hours, consolidated for a couple, and then we started to sell off, and we started to sell off during power hour. And when we started to sell off during power hour, you can see here we lost a lot of that short-term supply that we just picked up. So the level that I'm looking for the bulls, if they're going to continue this dead cat bounce, we've got to get over 18,500. Okay, if you want to mark it out, you want to write it down, you want to set it in your calendar, on your date book, you want to put an alert by it. 18,500, that's the 100 EMA, okay? And the reason why I say 18,500 is because 2 days in a row, we're having trouble in this 18,450, 18,500 range, okay? The last 2 days. Now, if we can clear out 18,500, we're going to have immediate upside room into 18,630, okay? That's subject to change, but 18,600. So we've got about 100 points to play with here on a continuation to the upside. That next supply zone is going to be the 100 simple moving average. Okay. And if we clear that out, that's going to be another video for another day, because we need to see some more things happen. Let's not put the, the carriage in front of the horse. Okay, let's not put the wagon in front of the horse. So the first thing I want to see, if you're a bull or you're more comfortable trading to the long side, is definitely going to be clearing out 18,500. That's going to be the indication that maybe we've got a little bit more potential upside here. Let's go ahead and partake in the long. Now you can see here, as the futures market has opened up, we've put in a little bit of a down move. We're catching support down here from this the low of day today, right? If you notice, this wick here is put in the first hour candle of the day. We dropped all the way down to a price of 17,966, and you can see here, now that the futures market has reopened, we've come into a price of around 18,030. So we're not that far off. And we've also got a little bit of a Bollinger Band that's holding us up here, but we do have overhead supply. So going into the overnight session, going into the pre-market, what I'm looking for, and let's stop scrolling across, what I'm looking for is, if we do start to lose 18,030, 18,000, I'm going to immediately gravitate my eyes towards this 17,966. That's going to be the price target, or somewhere near it. Okay, so whether we come 5, 10, 15 points of that price target, that's what I'll be looking for. Anything below that, we could potentially be talking about 17,832. Now, to the upside, it's going to be a little bit more tricky. There's only one of two things that you can do. You can use this previous hour candle as an absolute max pain dead hard stop and sit in it long, because you're anticipating a move to the upside. And if we break down, you've got to get out of that position. or you can kind of wait until we get back over some of this short-term supply. And some of this short-term supply is going to be over 18,180. That's going to have room into 18,250. That's your immediate short-term kind of choppiness range, kind of going up to the upside. What I'm looking for going into tomorrow, and if I pull up this daily chart, okay, I want to get a good look at this daily chart here. We're in the bottom lower half of this range. From this sell-off, we're just kind of trading in the middle of the range. I don't see any immediate downside risk until we lose 17,800s, okay? But I don't see any potential real upside until we get over 18,471. So this whole range here, this, you know, from 17.9 all the way into around 18,004 is going to be about a 400 to 500 point range. So what we need to do is look towards these smaller time frames and try to find where can we potentially make 5, 10, 15 points on an intraday scalp. Now that's where your strategy is going to come involved, because whether you're using a 20 SMA strategy or using an opening range or using initial balance, you're using some type of moving average, order blocks, or whatever it is that you're using, you're going to kind of have to fit that strategy into the direction of wherever this hourly chart and daily chart have potential to go. Okay. So for example, if we're kind of, you know, teetering at the bottom and we've got support sitting down here, let's say 20 points below at, what is this here on the daily, the 200-day EMA. Well, I don't really want to go short if we have potential to bounce. I might be looking more so for the long side of things, right? So until we break down the 200 EMA, 200 SMA, and then confirm that new low price, we kind of maybe want to stay more towards on the bouncing side of things, going back up to the upside. Because again, remember, this selling didn't just happen this week. Okay, this selling started on the July 11th. Okay, so this has been going on already for almost a month. Okay, so if you are now just barely trying to add short positions, especially if you're a stocks and options trader, you're late to the party. Where were you at when we started breaking down the 5 and 10-day moving average? Where were you at when we started to lose a 20-day moving average? Where the hell were you at when we lost the 50-day moving average, which I preach a lot inside of Evolution Traders? Over under the 50-day moving average is generally telling you who's got control of the charts for the course of the month. And if you realistically look, when we lost the 50-day moving average on July the 24th, we're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days where we have progressively moved lower. So we're talking about who controls the month. Well, we can firmly kind of say here the last 2 weeks, which is the past month since we've lost a 50-day moving average, that the sellers have been in control. That's why maybe some of the bounces aren't working out that well, particularly when you're getting in intraday, why things seem a little bit more choppy. Why when you do get a green day, such as today or even yesterday, off that reversal bounce, why it's hard to find those opportunities to get into the trade. It's because it's trending very, very hard, and you need to kind of find those sweet spots in bigger time frames, 1 hour, 4 hour daily, where you can kind of make some money on your smaller 1, 2, 3, 4, 5 minute time frames. Make sense? I hope this video finds you well. If it did, like, comment, and subscribe. If you would like to trade with me, join Evolution Traders, be a part of the community. We trade a lot of futures in there. We go over stuff each and every single day. There's a lot of great support in there. I've got a ton of lessons that are not inside of YouTube, that are inside of the Discord, inside of the community. And I'm always constantly updating those as well. And I'm there in real time to answer any questions and kind of go over things live in real time. Also, if you guys are scalpers and you guys are scalping, we got to do a little bit of housekeeping, guys. Again, this is what pays the bills to keep the YouTube channel going. Okay, so for all of you guys out there, you know, what keeps the YouTube channel going, what keeps the time and effort going into the YouTube channel for more videos? It's obviously the ad revenue that comes through YouTube, and it's obviously affiliate sales and stuff. Guys, if you guys are looking for a prop firm, Apex is one of the prop firms that I use. You can get up to 20 accounts. I got to do the whole spiel, right? Right now, it's, yeah, I believe it's still 80% off, 1 day to pass. There's no special discount code involved. You guys can just use code SAVE80, but make sure you guys use my link that's down in the description box below. Again, Apex gives me like $1.50. Right? That's full transparency, full disclosure. It's like $1.50, $2 every time someone signs up. So is it life-changing money? No, but what it does is keep the channel going, right? It sustains this YouTube channel, and it also helps me buy a cup of coffee in the morning when I'm doing my trading. So with that being said, I hope and wish you guys all a lot of success in your trading careers. Make sure to stay disciplined and make sure to like, comment, and subscribe. Make sure to turn on your bell notifications because I'm going to be ramping up content a lot more training videos, a lot more personalized kind of answering questions through videos on YouTube. We're going to do a lot more live trading. I'm in the mix right now. I'm adding another monitor here because again, I've got 3 monitors. It's not enough. I need another one so I can do some live streaming. Again, some of you guys have asked me for the live streaming, but it just gets kind of difficult when I've got, you know, my set of charts, and then I've got the prop firm brokerage, and I've got my Thinkorswim, and then I've got Discord, and I've got the YouTube software, and I've got the OBS software, which is what I use to record everything. It's cluttered. So the workflow in the workspace is not enough. I need another monitor, but once I get this, I just ordered it today, should be in tomorrow, get it all set up, got a longer desk to make sure everything fits. Once I get this set up, revamped yet again, because I just felt like I did this about 6 months ago, we are going to really start to dive into a lot more content and a lot longer content, not just video wise, but I'm talking streams, I'm talking podcast, I'm talking Q&As, I'm talking, you know, lectures, lessons, trainings, back testing, so forth and so forth. With that being said, this video is long-winded. I'll see all of you guys on the next one.